Good morning, everybody. Jack Leeson with StartupTrading.com. It is 9:20 here on October 20th, uh, 2025. And after quite a volatile week last week, we're probably getting some more of it to follow through here. So Friday, 2 weeks ago, we had that Trump tweet, sent the market lower. And then really going into the last week, we've held this 50% retracement along, which was that Friday low, Friday the 10th of October, to the highs of last week on the 16th. Now, that 50% retracement did break overnight, but during the regular trading hours session from 9:30 to 4 o'clock, we've held it. And that's going to give us an upside target basically back at a new all-time high here this week, and that's 25,419. Now, if I remove the extended session, you can see how well that was getting bid, or that's where that bid was coming from on Friday. And we are gapping up here 160 points. Now, out of Friday's low, we did have this 50% retracement that was front run by a few points, and we have now completed profit targets. We're trading 25,150s. So what I'll be doing, one is just taking this low to whatever that high ends up being. That 50% will be an entry level for me here today, and then the possibility of us going into extensions. So it'll be the high from 1230 drawn to whatever high it is, and these levels then, wherever they may end up, we don't know what the high is yet, is going to be the supports that we'll look for. So those are the two sequences I'll pay attention to. I'm just going to leave the traditional, the low to high up right now. And then when we finally settle in a high, whatever time that may be, we'll begin drawing highs to highs. And then for the S&P 500, um, the halfway back from that October 10th low to high, we traded that the regular trading hours, which is a little different. The Nasdaq didn't quite hold this. The ES is more aggressive in its bid. The S&P 500. We traded this on Wednesday. We traded it on Thursday. We traded it on Friday. So there's three separate days where buyers stepped in at 66.54s, and that upside target is 67.94. Okay, and then coming out of the lows on Friday, same thing. Low of the day to high, traded at 50% retracement. We've moved the targets. And as we move up here, we're at 67.37. So we're going to be looking for one, potentially the extension anchor to come into play from 1230, or two, just a traditional. Right now, I'll draw the traditional from the last bar here to that 67.37, and that'll be like right about here, and that'll give us a support. Now we're going to move on to commodities, and if you're watching my Zoom right now, you know what position I've taken, and that is in oil. So I'm going to go over what that oil position is, because you know me, I love coming in with a position in oil. But last week there was this extension short that had a downside target of 56.66, and that completed, and really everything below this 56.66 I consider for potential reversals until we trade back up into this extension. So I have the inherent bias that any longs below 56.66 are something I want to pay attention to, because I think that's where we're oversold. We're below the middle point of the day, which is this blue line, and then right before the open here, we had this puke of a bar through the lows of last week in an ATR bar down. So this bar here was, let's see, that was 62 points. 62 points. And then I immediately saw right after that this halfway back long come in, and you can see now we've run to targets. But I'm just looking for a trade back up into this midpoint. And whenever, if we can get it this week, that'd be lovely. But this 58.30, 58.29, I'm going to set an alert up there. Those levels are going to be levels where I'm going to be taking a short. I'm up about 20 ticks right now on this oil long, and looking for a 56.73 profit target on this trade, and then my stops below the low. That's what I have here for CL. Now gold got its first pullback in quite a while on Friday, and we've been look what's happened every time we've pulled back. The last time we pulled back was October 9th, and then that was followed up by five days of straight up price action. So gold continues to be extremely bullish, and outside of even though Friday was a pullback, there's been like about 1 day of selling pressure for every 5 days of buying pressure, and what is one of the most bullish commodity trends I've ever seen in my lifetime. So do not fade this rally. We came down into supports, and then Sunday night we've held it. We've held it. We've rallied out here. We've really, really crashed up to targets. And the last traditional, what we're going to do is we're going to take this Sunday night high, and this is probably going to be the most actionable trade at this point in time. You're either going to have this Sunday night high drawn to the high, the 50% or Tristan is a 43.17. So that 43.17 is going to be that next level I'll look at in gold for long, and then the deeper pullback would just be that European session low to high, and that's going to be a 47.88, which you can set an alert on. That 47.88 may trade sometime in the overnight session. But that is going to wrap up my videos here for this morning. I am going to, or my analysis at least, and then I'll continue into the room. We got about 4 minutes to the cash stock market opens. I will share this ES and NASDAQ level and continue up with you guys there. I do have a friend here with me too, so I'll be teaching him some things over the course of the day, and you guys will just hear me chatting with him. Um, so if you're curious who I'm talking to, yeah, I'll text that to you. It's gonna be this, but without like the spaces. It's just a phone number. It's just the numbers I texted you. So that is the, you got it. I love how Perry's video, Perry's video is still, or my video is still Perry's face. I gotta get my, what are they called? All right. So yeah, you have Thinkorswim, and you got a lot of stuff on that computer. So yeah, I basically am using like Thinkorswim, and then I use two different things to execute. It's oh yeah, it's TH something or other. It's like TH Wi-Fi. Oh, here it's asking me to share it with you. Taking out highs in the Nasdaq before it is in the ES. Also, big divergence on Friday. ES did not get it, or no, that wasn't Friday, that was Thursday. ES didn't get a new high, Nasdaq did on Friday, Thursday. Jeez. Yeah, so when you're first learning, like if you can get down like just learning how to place an order, and then you can come in and just like pay attention. Look, once if I teach you just like a little bit like what levels to pay attention to, I would say like just this blue line. So like you'll understand why I'm drawing this like with more studying, but basically when we come to this blue line right here, I'm gonna be buying.
Right.
So that's just like this simple part. So when I'm when I'm giving my analysis, like I'm walking through like 10 years of knowledge.
Oh yeah.
You know, so it's gonna go over anybody's head who's like brand new to trading for sure. Um, but like there's just some basic things you could pay attention to, and then also like I think it helps like by seeing like the orders I'm placing. So I'll go through and explain when I'm taking a trade, like why I'm taking the trade.
Okay.
And
I know how to place an order if you tell me when to place it.
yeah, no, for sure. And that's All right, guys, I'm placing an order in GC right now in that level I said I was going to. And then, wow, oil working quickly my way, looking for that midpoint there. And then I'll be sitting on the sidelines after that. Right. Oil is about 4 points away from hitting that profit target, and then we'll look for a new entry. But I am going to be exactly what I wanted to do is get back up to that midpoint. Remember, the midpoint is the middle of the day. Okay, so it's yesterday's range divided by two. That's all that is. That's all that is. And so when you have a trend reversion, whether we're below the midpoint or we're above the midpoint, that's kind of just a target I aim for. Just let's see if we can get back to the middle of the prior day. That's all. The middle of the prior day. I was looking for that gold extension, and then we've just come to that 38 so far. Didn't quite get the 50% retracement, so came about a point and a half away from where I wanted to buy. Maybe 2 points actually, but see if we come back there later. All right, guys, oil peaking up here, still inside extensions. Oh, so upset we didn't get that gold fill. We got close, but no cigar. It's so volatile. I mean, I guess I should expect that that's not going to get that 50% fill, to be completely honest, just considering how like aggressive this whole market has been here in gold, but still sitting there with my position and my order at that level. And oh, there we go. Filled out on my profit target for oil. So that was clean. Just got my profit target hitting oils. Ran it there from 57.17 to 56.73. Feels good. That is an ATR reversal trade. ATR reversal trade. See. That is a puke in reverse. ATR down, huge increase in momentum, and then we just stop. And then we go right back to where we came from. In oil, every dollar in oil is $1,000 per contract.
Oh wow,
So if we
that's
go from
big.
50, yeah, so if we go from $56 to $57 and you have one contract, that's $1,000.
Yeah.
Now they have what's called a micro, which is 1/10 that size, which is what I have people that are new to trading trade because $1,000, it's a lot of money.
It's a lot
Like
of money, yeah.
it's a lot of money. So a $1 move in what's called a micro contract is $100. So it's much more reasonable. So that move on a micro contract would have been $75 roughly from low to high. But if it was on it's called a mini. So there used to be in the pit back in the day when everybody traded with their hands, they had what was called the bigs.
Okay.
And then when everything went online, or like when things became automated and people started trading online, they called them minis. So they changed the name and they divided the contract by, depending on the contract, either four or five. So they went from it, so it was worth 1/5 of what they traded on the floor.
Okay.
But then as the market grew and the higher the market goes, the more each one of these products is technically worth.
Worth more, yeah.
So then when they're worth more, the moves are like also like bigger, like monetary wise. It's called notional value. So then they divided it again by 10. So they have like a much more manageable position size as opposed to because like in gold today, like a mini we're at an $11,000 move on
On
one
one?
on a minimum unit size.
Wow.
Yeah, and that's on a minimum unit size because we've had $110 move in gold, and every $10 in gold is $1,000 per
That's a lot per
contract.
contract.
Yeah, so like when you're trading stocks, like if you buy a stock at 100 and it goes to 101 and you buy one share, that's just $1.
Right.
With futures, it's like I forgot which each gold contract worth is how many ounces of gold, but one, I'll look it up. Or somebody in the chat. Does anybody in the chat know how many ounces of gold are in a futures contract? And you can go ahead and Google it because I actually forgot. I think it's like 100 and something, but I forgot. Let's see. Come on, Astrid. Are you about to answer it? Because I'm Googling it. 100 troy. And a troy ounce is like a little different than a normal ounce. I forgot. So there's 100 ounces of gold in each contract. And then in oil, I don't know how much. I think it's 144 barrels. Thank you, Astrid. So that's like huge. I mean, imagine 100 ounces of gold. Like,
That's a lot.
that's a lot. So that's like, so you can do 10 ounces of gold on a micro, which is still in these moves like that. On a micro, that would have been $1,000, which is still a lot of money.
Still a lot, yeah.
Yeah, like it's a lot of money. So each futures contract, and that's why like futures are considered derivatives. So what like the understanding like the process of understanding futures trading, like a lot of this stuff, like when we do this stuff, took some of this stuff like took me like 3 years to figure out, because when I first started trading there wasn't any information about this stuff online. It was really the Wild West.
You have to do it on your own.
Yeah, I mean there was nobody like kind of condensing it. I mean it's still like anything else. If you want to learn it, you gotta put your nose to the grindstone. All right, guys. So for oil here, I'm kind of interested in this next traditional. Even though there's two potential scenarios. That first traditional out of low has gone well into its negative 100, and we spent 25 minutes above it. So that traditional two extension is a potential entry, and that is at 56.52. And that's also going to be near this like prior low that we're holding supports overnight. So I'm going to re-limit 56.52 in CL. 56.52. Upside target would be 56.89s, or you have the potential that we get that full halfway back long again at 56.37. But the trend continuation needs to come from 56.52, and we've spent one time cycle above the negative 100. So I'm confident in that extension. The only thing that makes me wary of it, it is technically counter trend. With options, you're trading like 100 different stocks maybe, and each one of those stocks has a different price. Um, so like you're trading Google, you're trading Nvidia, you're trading Amazon, you're
Spy.
trading yeah, like there's so many different markets, and then each one of those things might have like earnings or like, and then you have different volatility. So it's like there's something called implied volatility, which is like how expensive they are making the option because of how much they think it's going to move. There's just so many more variables. And like sometimes you could be right on direction, but the option doesn't increase as much as you thought it would because the implied volatility is too high. Now, the best way to trade options is like one directional in a bull market. And a lot of people that make money trading options, they typically just like buy calls when the market's going up. But then as soon as the market goes sideways or down, like they just get fucking hosed.
You have to like sell. Right. You have to know when to
You
sell
have to
too.
know when to sell. But like most options traders that are just getting new into trading, from my experience, they're not like they're not really trading in a sense like they're not participating on both sides of the market. They're kind of just a one-sided trader. And when options get really big, like I see the cycles of psychology, like in 2020 going into 2021, the market was going straight up. This year, out of the lows, the market's been going straight up. Options becomes a very easy um, strategy where people will just buy, and then also like you don't now options, it's kind of hard to put a stop in, but you also don't technically need to put a stop in because if you buy an options contract for $500, that's your max loss. If you
Right.
put a futures contract out there for $500, well, if you never close the position and it just continues to go against you,
Losing more
you'll
than
keep losing more than
Oh no.
$500. Yeah, because I mean,
More
of course,
risky then.
it's more risky in the sense of the loss not being capped. But that's like if you buy, it's like the same thing. Like if you bought a stock at $100 and it just keeps going down, like, but futures is just more, there's more leverage involved. So yeah, you can definitely lose more money if you don't know what you're doing. Now, the other thing about like options, the spreads are wider, and I think the biggest thing is just there's so many more variables when you're options trading versus like the amount of the different stocks, the trends. It's also a slower play. Like this type of trading, like I could trade options no problem, but like there's also something like I think people get psychologically like it's like hopium. Like you're in an options contract, and like once you trade them long enough, like the option goes up like 100%, but then you closed it and it went up like 300%,
And you regret
and
that.
you're like,
Those, yeah,
oh
I
yeah,
noticed that. Like I was trading with the buddy, like he was telling me what to do.
uh-huh,
I made good money, but at the same time, like I was not paying attention.
uh-huh.
So I would do when I was driving. I was driving. I lost like 5K
Y-
sometime. Like 3K.
Yeah, I mean
That's
that's a lot. That's a
that's a lot
lot.
of money.
That's a lot of money for sure. I mean, especially when you're fucking driving,
Yeah,
lose three
I should
grand
have
while
kept
you're
driving.
driving. Yeah.
And he like yelled at me. He's like, "Yo, like he's one of my good friends too."
Uh-huh.
He's like, "Yo, what the fuck are you doing, Walter? Like you're losing all your money." And I was like, "Yeah, I know, dude. I had to stop." Like,
Yeah, for sure. No, I mean it becomes that, and then also people think like you can trade while you drive. Like probably not a good idea, especially in size. Like if you're taking like little like $200-300 bets, sure, but like all of a sudden you start laying 5K out on some weekly
that's what I did.
options,
Yeah,
like
yeah.
you're gonna get like you might as well be at the casino.
Might as well, yeah, because it's gambling at
Yeah,
that
it's
point. Yeah,
gambling at that point. Like versus like what I try to like explain like what I'm doing, it's like it's strategic small bets. Like there's not like ideally like I don't really have outsized winners. Like with options trading, you can get outsized winners because if you're long a stock, um, maybe that stock goes up, to 100, like you'll see these things on like TV, like when Oracle was up 40% a day, it's like all these option contracts are up 8,000%, and it's like that's like a lotto ticket, like
it's a lot.
like that's a huge. So then, I think like that type of trading makes you convinced that like sometimes you should hold longer, and then holding longer you get screwed. It's just like it's so much more psychologically hard to manage
It
versus like
is.
this type of trading that I'm doing. Like I'm never looking for that because that doesn't really happen. I'm just looking for ideal entry points. I'm holding for a specific amount of time. I try to make it much more like of a process that I can repeat over and over again because I'm
Yeah,
just looking for like base hits that add up and then compound, as opposed to like with options trading, it's a lot more losses as a percentage of your trades, and then also higher wins. So like now, like that trade I took before, on oil, like my risk to reward ratio. So I was risking about $1,000 and I made about two. So that's technically a 200%
200%,
trade.
yeah.
It's a 200% trade, but you have to look at it differently. That'd be like if I bought an options contract for $100 and went to $300 because I risked $100 and it went to three, so I made $200 on my $100. But you really have to like understand those calculations that every trade is the amount of money you're risking as well as your potential reward. But like if if I don't even know if you would have traded that expressed that same trade in an options contract, you wouldn't have been able to do that return.
No. Would it be
Um,
less?
it would be less, I mean, as far as unless you had like a stop in the option, but like I have a friend in here who used to trade, and he could talk about it, but I won't say his name, but he knows who he is if he's listening, and I know he's listening. But he was trading SPX options, and I was like, just trade futures, and then like a couple weeks of trading futures, he's like, well, this is so much better. You can trade futures on any of the or options on any of these products I'm trading, but the liquidity isn't there. The order management isn't there. Like as far as like bracket orders, like I get in a trade here, my stop and my target are there, and I can move them around. But if you get in and they don't even have these order functions in options. Now, options have their time and place. But in it, and if you can trade futures, you can really trade everything. But options becomes every trader gets, and I was into options, but I went through this cycle in 2013 where I heard about options. I was like, oh, they're sexy. I can, make a bunch of money just like anybody who comes in and starts option trading and um like made a bunch of money and then just lost it all. Just lost. I took like 7K to over $300,000 and then just blew it and then just lost it all.
Oh, wow.
Yeah, because I was only betting long. And then as soon as you get a sideways market to down, of course, to get from seven to $300,000 in under a year without knowing what you're doing, you got to be betting pretty big.
Of course.
And like sooner you'll be right, but then all of a sudden, as soon as you start going wrong, unless you stop immediately, you're just
You're done.
hosed.
Yeah.
You're hosed. And that's what everybody will go through is because you begin to think that you actually know what you're doing, but you don't. Because you've been winning. So you're
Right.
like, how could I know what I'm
Want to
doing.
continue winning every day. So
Yeah.
you know,
Yeah, but then you get a dose of the market's reality. Yeah, no, I mean like every trader goes through different cycles of these things, and it's just a matter of like, if somebody's there to point you out before it is. All right, so let's see if we can place you some orders here. That you're just gonna have to All right, quick move. I haven't even traded the indexes yet. I've just been trading. I tried to get long this oil again at 56.52. We came to 56.53 because you guys are front running me. I know what you're doing. You guys are all putting your orders ahead on me, and I'm not getting filled. So I put in order to buy oil at 56.52, and we went to 56.53.
Oh
It's like
wow.
1 penny above.
Yeah.
Like joke around that they're all front running me, but like
For 1 penny. Well, what is 1 penny equals to
1 penny's $10 per
per
contract. But
contract?
sometimes, like, if you're using like a method of trading that like other people are like, because my whole assumption on like the way I trade is that there's algorithmic traders and even more manual traders
Mm-hmm.
that are looking at the exact same stuff I am.
Right.
And when people are looking at the exact same stuff you are, like, let's say there was like probably like, $30 million of buy orders right where I was.
Wow.
So somebody with
Yeah.
a more sophisticated program sees that and then they move their order up. I don't have that sophisticated of a program where I'm seeing all of the volume or maybe hidden orders like
They
some
do.
they do. They
Yeah.
can see like maybe hidden orders that I have no idea exist because they're running tens of billions of dollars. Like I've like you guys like Citadel, like Renaissance Technology, Jump Trading, like these guys are running like super sophisticated stuff, and like
Oh, I
I'm
bet.
just riding the coattails of these people. Okay, so are you in?
Yeah.
Okay, so go to the top. All right, we are up at the negative 100s in the net ES of the pullback from the lunch hour ending on Friday. So we're gonna look for that extension at 67.27s here. That's going to be your next entry. And then for the NASDAQ, we're going to look at the extension from the 1230 high, and that's going to be your next entry. So Those levels are in. I'm gonna place some orders for entries. I'm gonna go for the ES. Right now, I'm gonna leave the Nasdaq B, just because I mean, I might place. I'll just put an order at the 50 and I'll drag it around. But I don't want to be taking both of these at the same time. That's all. I don't want to be getting long ES and the Nasdaq at the same time. It's the same trade, so. All right, guys, gold. I'm just taking to this new high. I'm not taking to the full negative 23 of the extension I bought here in GC. There's an old negative 61 here at this 47.7. So that's my GC target. But I mean, once again, gold has proven itself to be extremely bullish. That's why I've stepped in here. Quick 25, 26 points now, going to be about 28 or 29 points to target in 15 minutes. So boom, target hit for 28 points there in gold. Great trade. I'm sitting sidelines there. I got orders and everything else. So two trades off the table so far, both to profit target, both quickly. We're moving nice here this morning. The RTH traditional for the NQ. I mean, I'd rather wait. I'd rather wait. We're at the third test of this upper trend line. We're very high above. We're up 240 points without a pullback. That very well may be the trade. I'm not saying we're not going to trade that, but at this point in time, I'm following the series of the prior day. But it is a new week. It is a new week. We'll have to see, like, I'll draw it here, but we'll have to see like what the pattern is coming into it. There's still a lot of range here. I mean, that's almost that's going to be what, 70 points off the high. clicking. I'm putting my mouse and my cursor over this candle, and at the top of my screen, it's telling me a number, and that's how I know. So if you like, here, close your active trader tab.
I have to use this mouse because like, for some reason the right click doesn't work here.
Oh, bummer.
Yeah.
Yeah. It's hard to trade without a mouse, I think. Some people.
No, it is.
There's too much clicking.
Yeah.
There's too much clicking. I mean, I got trackpads for emergencies and backup batteries, but so yeah, I mean, you're mousing over this. So at the top, you see here this line. You can mouse back over here, but if you just read at the top,
Okay.
all of those numbers, you have a date and a time. You have the O means the open. So the open of that candle where the candle begun. L is the low. C is the close. R is the range. So like how big that move was. And then Y is just where your access is, where your actual cursor is.
Okay,
So if you look to the right, that number will match that number. I mean, Y is kind of irrelevant as far as like information you would need. But yeah, those candles are referred to as OHLC, which is open, high, low, close, and that's how they're formed. So like the structure of that candle is formed by those four I guess inputs. So the open is on a green candle, the low of the body. That's the body.
Right, of the candle.
Yep. Sorry, I just gotta ask a question. Kenny, I'm probably gonna look to get out here in about 25 minutes from here, or really just um, let's see. If we can pop back up, I'm definitely looking to just close that trade. I think the thing is we've retested this lower traditional and we're bouncing off of it. So you would either move your stop below that low, which I am going to move my stop below that, and then just set a timer every 25 minutes. Move my stop to, what is that, 35. Every 25 minutes and just trail. I'm going to set a timer for 25 minutes from here and then trail at 11:30. Depends on if you want to hold your risk or not. But yeah, not a good question. Or just take it off for break even. If we didn't come so clean out of this traditional, but then again, you are negative 16, so we need to start trailing aggressively every 25 minutes like we made that swing low. You need to trail aggressively, tighten up your risk. So 25 minutes from here is going to be 10:55. Or wait, no, it's 10:50. It's 11 o'clock right now. 11 o'clock, so we're going to go, and I'm gonna go at 11:20. I'm just gonna move my trail up again, but I do still think we hit that 56.96. All right, guys, we continue to go higher in the indexes. I'm only long CL. I'm moving my stop here up again. I'm just going to move it above my entry because at this point in time, I don't think it needs to go any higher. Or sorry, it doesn't need to go back on that retest. So we're going to be locking in a gain there. We've had one move to target in oil. We've had another move to target in gold. There's been no entries I've taken so far in the indexes. We're just in that super aggressive bid. No pullbacks realistically, and so you would have had to been extremely aggressive. We've had 1-2 bar pullbacks on the 5-minute chart. Moving to the top of the range, moving through last week's highs. We will get these pullbacks, but maybe they're not till tomorrow. There's a new high there in CL. So new high in CL through that most recent high, which is exactly what I wanted to see, exactly when I wanted to see it. I said in the room, moving my stop up after 11:25. 11:25, just moved my stop up, told you guys about it, and we're getting that punch through higher. So we're getting that time continuation that you want to see when you're really in any trade. You want to see things move your way within a certain period of time, and if it's not, it's just not a great trade. Doesn't mean you're wrong, but it's just realistically not a great trade. Oil or gold is coming up to its target from this morning. So we can look for another entry there. I have an order out there, but it's not even close to getting hit. We've moved really far off of my entry, about 50 points. I only held for like 20 some, so that's all right. Played it the way I wanted to, played it the way I planned to. Moving into European session close here at 11:30. So with that 11:30 time frame, guys, I'm shutting down the YouTube. I have one position on in oil. I'm gonna leave that up. Please give this video a thumbs up on YouTube. Do me the favor, and we'll see if we can continue up. I'm gonna increase my stop again here. This is quite the hammer candle in CL. I'm gonna move my stop up and to like 50. I mean, not that it's aggressive at all, but just a few more ticks, 56s. And if it comes down to 56s, that's 4 ticks above my entry. I'll just take it off there. But it was quite the pop higher above that, but we're still seeing some rejection here, and I'm not going to risk anything on this trade anymore. If it moves against me, I'm just going to lock in a little bit of profit.